You know that feeling when you open a big, dense financial report
Mm.
and you wish someone could cut through all the numbers and the jargon.
Yeah, and just tell you what really matters.
Exactly. Well, that's what we're aiming for today. We're taking a deep dive into the Q1 FY26 financial performance of NCC Ltd.
We've really gone through their official board meeting outcomes, the detailed financials, both standalone and consolidated, and their investor presentation too.
Right.
So our mission here is basically to pull out the most important bits, the key takeaways, so you get a clear, concise understanding of where NCC Ltd stands right now.
And maybe where they're headed.
And what's driving its direction, absolutely.
Yeah.
Especially looking forward, NCC Ltd at a glance, the foundation.
Okay, so first things first, let's set the stage a bit. Who exactly is NCC Ltd? For anyone maybe less familiar, what's their basic story, their core business?
Well, they're a major player in infrastructure. They talk about having a legacy of excellence, and they've been around quite a while, over 47 years, since 1978.
Wow, okay.
They have a truly pan-India presence, so they're operating right across the country. And their stated purpose is pretty clear: building resilient infrastructure for a sustainable future.
Okay, and infrastructure isn't just one thing. They're not just building roads, are they? It sounds like they do quite a bit.
Oh, absolutely not. Their business is really diverse. They call them diverse business verticals.
Right.
We're talking major stuff like buildings, transportation. So yeah, roads, but also bridges, flyovers, water and environment projects, irrigation, mining, railways.
Railways, too.
Yeah, and electrical, specifically transmission and distribution lines, T&D.
So pretty much if you see some major construction project, a big building, new power lines going up anywhere in India, there's a decent chance NCC is involved.
That's a fair way to put it, yes. They have their fingers in a lot of pies, infrastructure-wise. 2, Q1 FY26 financial performance. The headlines.
All right, let's get into the numbers then. Let's unpack this Q1 FY26 performance. At first glance, what are the headlines? What jumped out?
Okay, so if we look at it on a consolidated basis first, that means the whole NCC group, subsidiaries included.
Yeah.
For the quarter that ended June 30th, 2025, we did see a bit of a dip. Total revenue, and this includes other income, was 5,207.93 crore.
Okay.
Now that's actually down 6% compared to the same quarter last year, where they reported 5,558.33 crore.
Okay, 6% drop in revenue. What about profitability? Like EBITDA?
Right. EBITDA, earnings before interest, taxes, depreciation, and amortization. It's often used as a kind of proxy for core operational profit, you know?
Yeah, before financing costs and stuff.
Exactly. That came in at 456.12 crore, and that was also down from 477.91 crore in Q1 last year.
Okay, so revenue and EBITDA both down slightly year on year. What about the actual bottom line? The net profit for shareholders?
Yeah, the net profit attributable to shareholders was 192.14 crore, and again, that's a decline from 209.92 crore they reported in Q1 FY25.
And per share. The EPS.
The basic and diluted earnings per share, EPS, that stood at 3.06 for the quarter. Last year, it was 3.34.
So a consistent slight dip across the board on the consolidated side. That might, make some people pause. Did the standalone results, just the main NCC company itself, show something different, or was it a similar story?
It was pretty much a similar trend on the standalone side, too. Revenue, including other income, was 4,429.64 crore. That's a 7% decrease from last year's Q1.
Okay.
Standalone EBITDA was 394.92 crore, down from 439.64 crore. Net profit was 190.1 crore, down from 200.74 crore.
And the standalone EPS followed suit.
Yes, euro 3.03 compared to 3.210 last year.
Okay, so definitely seeing that slight dip across both consolidated and standalone figures compared to last year's first quarter.
Yeah.
My first thought is, was there anything unusual driving this? Any one-off events or, exceptional items hitting the profit?
That's a good question. But for this quarter, Q1 FY26, they reported no exceptional items that had a significant impact on the profit. Not on standalone, not on consolidated. So it suggests the changes we're seeing are, well, primarily operational. Could be down to project timings, maybe some large projects finishing up, or even just the usual sort of seasonality you see in construction.
Right, so not necessarily a big red flag, but
Yeah.
it definitely makes you look closely at what's coming next.
Right.
Those forward indicators become even more important.
Precisely. 3, the project pipeline. Order, book, and new inflows.
Okay, so while those Q1 financials show maybe a bit of a headwind, for a company like NCC, building the, the backbone of the country, the future pipeline is often the real story.
Absolutely.
And this is where it gets, I think, really interesting. Let's talk about their order book. How healthy is that pipeline looking?
It looks incredibly healthy, actually. The consolidated order book as of June 30th, 2025, stood at a massive 70,087 crore.
70,000 crore. Yeah.
I mean, for an infrastructure company, having that kind of backlog provides a very, very stable base. It gives them what they call moderate visibility for project work for, well, for years to come, really.
That figure is huge. But an order book is great, but you need to keep feeding it, right? What about new projects? Did they actually win much new business this quarter?
Now this is where the story gets quite dramatic this quarter. They saw really significant new order inflows. The total came to 3,658 crore.
Okay, 3.6 billion rupees. How does that compare?
Well, here's the kicker. That number represents an absolutely staggering 797% increase in new orders compared to the same quarter last year.
Wait, 797% increase.
Yes, year on year for the quarter. It's not just a big jump. Well, it fundamentally boosts their near-term pipeline.
That's incredible. What does that mean for their full-year target?
Well, that 3,658 crore already covers about 17% of their full-year guidance for new orders, which they've set between 22,000 and 25,000 crore.
So a huge start to the year on winning new work.
A huge start. It signals really strong future revenue potential, and, it also gives them more power to be selective about which projects they bid on next. 4. Segmental performance and project mix.
Okay, that 797% surge is definitely the eye-catching number this quarter. But what kind of work is this? Where are these new orders coming from? Let's dig a bit deeper into the segments. Which parts of the business are driving things?
Sure. So the company breaks down its revenue and results by segment. And no surprise, their main segment, construction, which, as we said, covers that huge range of projects. Buildings, roads, water, rail, mining, power lines.
Yeah, the core stuff.
That was by far the biggest contributor to their profits. Looking at the Q1 FY26 consolidated segment results, construction brought in 292.17 crore in segment profit.
Okay, the lion's share. What about the others?
Well, real estate, that's their sort of property development and construction arm, contributed a much smaller 1.14 crore. And the others category, which includes things like their BOT road projects.
BOT being build, operate, transfer.
Exactly. Where they build it, run it for a while, then hand it over. That contributed 1 crore.
So construction is clearly the engine room here, absolutely dominant. Does relying so heavily on one segment pose risks, or is it actually their core strength given their history?
I think it's seen as their core strength. But the key is the diversity within that construction segment. That's where they mitigate risk. And you see that reflected in the order book composition.
Right. How does that massive euro 70,000 crore break down?
As of the end of Q1, buildings make up about 34% of that total backlog. Mining is next at 16%, transportation 15%. Electrical T&D is significant at 18%. Water and railways together are 11%, and then irrigation and others make up the final 6%.
Okay, so fairly well spread within construction itself.
So, right, diversified, yes.
And those huge new orders we talked about, that 797% jump, where did they land? Did they follow the same pattern?
Pretty much, yeah. For the new order inflow in Q1, buildings also led the way at 34%. Transportation followed at 26%. Electrical T&D got 22%. Then mining at 7%, water and railways at 6%, and irrigation and others at 5%.
So it looks like they're really doubling down on their core strengths.
It definitely shows a consistent focus. And the company emphasizes this. They say they maintained focused operations in buildings, transportation, water, and electrical segments, and stressed, importantly, disciplined project management and cost control.
Which is absolutely crucial in the sector, right? Margins can be tight.
Extremely crucial for profitability, financial health, and strategic outlook.
Okay, so beyond the Q1 numbers themselves, what does all this tell us about NCC's overall financial health? And what are they planning strategically?
Well, looking at debt, their consolidated net debt stands at 1,574 crore. Now, for a big construction company needing lots of capital, you have to view that debt level against their huge order book and, importantly, their credit rating.
Right. What does their credit rating look like?
That's a key indicator of their financial standing. They managed to retain their AA rating with a stable outlook from India Ratings and Research.
AA stable. That's pretty solid.
It is, and it reflects, as they put it, their financial prudence and focus on capital discipline. That's really important for managing these large long-term projects.
Makes sense. And what about the rest of the financial year? What's the management thinking? What's their game plan?
Their FY26 strategic focus seems quite clear. They say they're approaching the rest of the year with a healthy bid pipeline. They're emphasizing continued project selectivity, tying back to that strong order inflow, perhaps?
So they can afford to be choosy.
Exactly. And they're focusing on close alignment with current market opportunities. It sounds like a proactive stance, getting ready for what they themselves describe as a gradual recovery in the market.
A gradual recovery. Okay.
And they also mentioned they sustain progress on the company's ESG initiatives and workplace safety programs, which, is increasingly vital for investors and stakeholders these days.
Definitely. Any other significant points from the board meeting? Any leadership shuffles?
Yes, actually. There was a notable management change approved. Shrika Krishna Rao, who is the head of internal audit, is retiring superannuating.
Okay.
And in his place, they've appointed Sri A. S. Krishnan as the new head of internal audit starting August 6th, 2025.
In his background.
He's a chartered accountant and an ICWA that's like his cost and works accountant, similar to a CMA in other places. Brings over 29 years of experience in things like systems evaluation, risk management, regulatory compliance.
So, sounds like a continued strong focus on internal controls and managing risk.
That's certainly the signal it sends, yes.
Yeah.
Oh, true.
Okay, so let's wrap this up. We've covered a lot of ground. What does this all mean for you, the listener, who's maybe tracking the infrastructure sector or NCC Ltd specifically?
Well, we've seen NCC navigate this first quarter, Q1 FY26, with, yes, a slight dip in those headline financial numbers compared to last year.
Right, the revenue and profit were down a bit.
But, and this is the crucial part, you contrast that with the context, a really robust 70,087 crore order book providing that huge stability, and that truly significant surge in new orders this quarter, that almost 800% increase. When you put it all together, the stage seems, well, remarkably set for future growth. The dip looks more operational, perhaps timing related, than like a fundamental issue.
It certainly feels that way. And that strategic focus they mentioned, being selective with projects, aligning with market opportunities. It sounds like a pretty smart way to navigate what they're calling that gradual recovery.
Yeah, they seem to be playing the long game, thinking beyond just the immediate quarterly results.
Definitely.
And maybe this leads to a final provocative thought for you to chew on. Just how critical will NCC Ltd's ability be to actually convert that massive order book into timely, profitable project execution, especially if the economic environment remains a bit uncertain or fluctuating?
That's the key, isn't it? Execution.
It really is. And thinking about that huge 797% surge in new orders this quarter, what impact could that anticipated gradual recovery really have on their ambitious full-year order target? Could they blow past it? Or are there still potential bumps in the road that might, temper those expectations somewhat?